Hello and welcome to this very special conversation. Joining me today is Lovaii Navlakhi on this conversation, which is brought to you by the Bombay Stock Exchange Investor Protection Fund in association with the Money Mile. Lovaii is one of India's best known certified financial planners. Thank you very much, Lovaii, for coming by and speaking to us. Difficult times we live in. Lovaii, can you tell us a little more about the kind of equity mutual fund schemes that are available, and what type of investor should look at which of these categories of schemes?
Great. So when we are looking at investing in equity schemes of mutual funds, essentially, I'll probably start off with somebody who's a first-time investor. You will tend to tell them that it's a good idea to invest in an index because you will keep watching how the BSE Sensex is moving and how is your fund moving. So invest in a large cap index fund. The advantage is also that it's a passive fund, so the expense ratio is a little lower than an actively managed fund. So start with an index large cap fund. Then you can probably look at a large cap fund itself, which is an active mutual fund, which essentially invests in the top 100 market cap companies in India. Once you've experienced that, now you want to take a little bit of risk. So I want to add a little bit of mid cap to my portfolio. Then there are multi cap or large and mid cap funds available, which will have say 35% minimum in large cap, 35% minimum in mid cap, and the rest can be determined by the fund manager. So you could start taking sort of small bites of that. Once you've experienced that and you feel, yes, now I'm willing to take some risks, I have a little longer term time horizon, 7-8 plus years for my investment, and I want to put a certain part of my money in mid-cap funds. These funds will only invest in mid-cap stocks. Mid-cap stocks are stocks which are ranked sort of 101 to 250 in market cap. Even in this, you could invest in an index of a mid-cap fund. And then you go into a small cap fund, which is market caps of companies which are ranked 251 and above. Obviously, there are many companies in this, so selection of company becomes crucial. We also know that the risk and volatility is pretty high over here. So keep that in mind and invest with a 10-12 year time horizon. And finally, within equity schemes itself, you could invest in international funds. So, look at whether you want to go and mirror a fund which is only investing in US or only investing in Far East Asia or only China. And then accordingly, you can select. So that's also possible through an equity mutual fund.
All right, Lovaii, thank you very much, like always, for coming by, sharing your perspective and your experience with all our viewers. Thank you once again.
Thanks so much.